Hello, fam. Welcome to Electron and today we will be talking just about the few things, and then we go to our currency weekly outlook, right? So it's a new week. This is the week of December. The best thing you can do to yourself is to give yourself time. You see, you observe that many people are not making progress the way they should or the way they feel they should, but it doesn't mean that you should give up. All right, you should always give yourself time because the time it will take you to master whatever you know may not necessarily be the time to take someone else. So you give yourself time, even as you work hard. You may not see the result as you ought to, but you must still give yourself time, right? Time is a factor of the process. It's always a factor. It's not just hard work, study. No, you have to give yourself time. So if you may not, if you're not seeing the result as you should, doesn't mean you should give up or you're not doing well enough. Just give yourself time. You continue doing one thing. A writer says that it takes about 21 weeks or thereabout of consistent practice to become perfect at something. So you should give yourself time. It's not all about hard work. It's not about study. It's not all about risk management or whatever. You also have to give yourself time because time is the factor of the process, right? So let's go straight to our weekly outlook, right? So we'll be looking at currency pairs, what I expect to see for the pairs I trade because I don't trade every pair. So I'll just go about, let's say 3, 4 pairs and then we'll wrap it because it's basically the same thing we're looking at, right? So let's start with the USD JPY, right? So and then make my chart visible, right? The first thing you should do, you should always go to the daily time frame. And so your analysis should always start from you want to see what the daily chart looks like, right? So let's remove this, right? So the first thing we're looking at, we want to know the overall trend of this market. And as you can see, this market have been pretty bullish. You can see our higher high, our higher low, you can see our higher high here, you can see our higher low, and then you can see our higher high here. So if you observe something, this market closed clearly below the last higher low. And I told you that a break of structure occurs when the market closes below the last structural point. So for a bullish market, you don't want to see price come and close below the last higher low. But for this scenario, you can see a price close clearly. To confirm that, you can simply go to your line chart. Look at our line chart here. You can see it clearly that it's closed below. Let's remove this so you can see it clearly. So if I bring my horizontal ray, all right, to this point, look at this. This is where the last higher low was. Yeah, and you can see the price clearly closed below it. So this is a clear break of structure. So for now, USD JPY is pretty bearish. USD JPY is bearish. So now we have known that the overall trend of the market is bearish. So now go back to our candlestick pattern. Now we are looking to sell this market on a long term, right? I mean, so you know that when the market breaks structure, we are expecting that lower high to form, right? That means if we see a market do this, do this, do this, do this, do this, right? And the market eventually breaks structure. We're expecting the market to retrace to give us that lower high and then rally down, right? So we're expecting the market to come up, give us that lower high, and then fire down, right? So this is where we're looking to take our sell, right? The mistake that many traders make is that when they see maybe a break of structure like this, they will now say, okay, this is a broken support. They'll do like this, okay, broken support, right? They don't try to sell here and eventually stop them out before going. So the market makes higher highs, higher lows, not necessarily market does not necessarily move from zone to zone. It moves in a let's say a diagonal pattern. It makes goes diagonally, comes down, goes diagonally, goes down. So there's no go straight. Like you expect the market to just break support and this is a daily time frame. It doesn't work that way. So you expect the market to do something like this. Now it's not going to work that way because there's a lot of imbalance, a lot of orders to be filled up. So you expect the market to do this, give you in that level high. And if you have not watched our video on market structure, please do want to go and watch it. I explain all this break of structure, all of that. So expect the market to come here, give you that lower high, and then continue rallying up. You're looking for a sell here, so you can simply bring out your Fibonacci 2, right? You take it from the swing high to the swing low, right? So you're extending your Fibonacci 2. You want to see the market come into your Fibonacci levels, that is between your 0.5 to your 100. That means you're looking for setups. You're not looking for setups at the 8.2 or all of that. You're looking for the market to come into the 0.5 to 0. Let's remove the 8.2. let's say it's about 0.5, 0.786. Okay, right, okay. Minus by 71.8, that's not 71.8. Oh, right. So let me see if I can include that by 71.8. Oh, where's the 71.8 here? Let me see. Okay. 1.618. So 1. Okay. I don't think it's here. So I can safely include that. This is 0. Right, 0. Right. So looking for how to include this. Since not working, let me just edit from this point 718. Right. So you can simply hide this. All right. So we're looking for price to come into any of here, give us our sell, and then we'll take the price down. So back to our charts. Let's go back to what we were doing. So I was saying that there was a break of structure on USD JPY on the daily time frame. So now we have known that this market is going to buy up to give us our sell. So now how do I plan my setups? So now I have seen there, and if you look closely, there is an imbalance on this chart from this point to this point. What's an imbalance? Is price inefficiency. That means this whole point, there were only sellers at this point. So you're expecting market to buy into this region to fill this imbalance before selling down, right? So now we are looking for our sell setups somewhere around here. We're not looking, we want to see our market come into this region and then give us our sell. So now we have known that on the daily time frame. So now we scale to our small time frame. Always remember to always start your analysis on the bigger time frame and then you scale to the small time frame. So we have seen this and say, okay, the market is going to sell down. So now let's go to the small time frame. Now we come to about 4 hour. There's no analysis. Okay. Now we can see our 4 hour. We can see our 4 hour. This is what we analyze on the daily. Now we can see, but on the 4 hour, look at what happened there. Now we have known the daily time frame. We can now remove this after analysis from the daily. So we can now say, okay, let's look at what the small time frame is doing because we want our time frames to be in confluence, not taking our trade. So you can see from the 4 hour, we had our higher high, higher low, higher high, higher low. This is our higher low. Then we have our higher high. And based on our 4 hour now, you can see there was a break of structure. Why? Because price came below this higher low. So the market came below here, giving us our break of structure. Now, within the 4 hour is also bearish. So this is a very bearish market. Now, we have seen that we know our 4 hour is bearish. Now we are waiting for markets to the market has already broken structure, right? Look at where it came. The market to come into this area from our daily and give us our sell. So now, how do we streamline our entry? Now we have known that 4 hour is bearish as well. So we can now remove this and now look at a smaller time frame to give us the better picture. So now we have seen that on our 4 hour. We can simply go to our 2 hour now to see where we can get our entry, right? Now, on the 2 hour, this is our area of interest. So I can simply label here our area of interest, right? So you can see our POI, point of interest, or point of interest. This is our point of interest, this whole region around there. Or let me edit that to make it more, since point as well, let's say our AOI, our area of interest, This region, we want to sell somewhere around there. Now, we don't just sell when the market has entered there. We have to look for a good confluence to sell this market. Now, let's look at what happened there. You can see that this was the last bullish candle before this sell. So we can simply call this our order block. So this is our order block, this region here, this is our last bullish candle before the sell. So this candle is also a candle of interest because you should always want to take your entries at an order block. So this is our last bullish candle before this last sell. Now let's look closer to see how we can make our entry. Now let's look at what happened on the 2 hour time frame. You can see higher high, higher low, higher high, higher low, and then we saw this push up and then a break of structure. Now, if you look at this closely, let's remove this so you can see clearly. Let's remove this. This is how you do your weekly analysis. You come from the bigger time frame to the smaller one, right? Because of time, I may not do only 3, so that I will not spend the whole time doing this, but it's still the same concept. So now we can now remove this. We have our area of interest, right? So we can now look at this. This is our area of interest. You still remember that it's our area of interest. So we can move this a bit. So we can see clearly. So now we are using 2 hour time frame now. And as you can see, the market captured liquidity here. There was something like an equal high here. So you can see, so we have seen our equal high here. This is smart money concept now. We can now mark this point as captured liquidity, or we can label it liquidity grab, right? So let's label it, that's easy for us. Liquidity grab. We want to look at those areas that liquidity was grabbed because they are potential areas of mitigation. So this is our liquidity. Liquidity was grabbed at this point, LG, and semi quarter LG, or liquidity grab area. Liquidity was grabbed at that point, right? That's our LG area, liquidity grab. So now we know that this move that capture liquidity is actually in drawdown. So now we can now remove this. We're now trying to streamline our area of entry. We can now remove this. Still remember, this is the area of interest. So this is our liquidity graph. You can see that an LG was here. Liquidity was grabbed at this point. So now we can now streamline this whole move because whenever liquidity is grabbed, market is going to mitigate into it before selling down. So now this becomes our area of interest on the smaller time frame, meaning that we expect the market to buy all the way into this point and then sell down. So we're expecting the market to buy all the way into our area of interest. This is our main area of interest now, and then sell down. So now, how do we do this? We have seen that this is area of interest, this whole buy move, and this here is our other block. So we can bring out our Gantt box. Here's our Gantt box. We want to know this. You can take from here to here. This gives us this is the whole move. So the markets may come into the 50% of this move and then sell down. So this may be our area of interest. But for me, knowing the knowledge of other blocks, you can simply say, okay, this is the opening of the last bullish candle before the break or short. So this is our other block, this particular candle here, this last bullish candle. So I can simply say, okay, I'm trying to streamline my entries. I will have a little drawdown. So I can now streamline it to this point. To the week, look at the week of this candle here, the week of this candle here. So that becomes my area of interest. So I can simply say, okay, I will sell from here, right? I can simply sell from here. So I can simply sell from here with my stop loss above this point here, right? So I'm simply take my sell here, and then my target will be where? My target will be where? This point here, this equal lows here. Remember, the market always trades from liquidity point to liquidity point. So I can simply take my sell at the open of this last bearish candle, which is my other block, which coincides with my area of interest and which also coincides with this liquidity graph, right? So I can simply take my sell here and my stops above there. As you can see, this is a 1:5.95 trade. It's almost 1.6. But take it to the best place. This is the last low you can find. So you can look at this last low. This is our last low you can find. So look at this last low for your PP, this low here. So if you look at that low, you can say this is a 1:6.183. I mean, they're looking for the market to buy up to here and then leave it that sweet sell down to this point. So this is what I expect on USDJPY for this week. I think the market will buy into this week and then sell. It may not be this week, it may take about 2 weeks to happen, but it is going to happen, right? But does it mean that I cannot take a buy up to here? Remember that you should always trade in line with structure, right? Don't always trade counter trend, right? The market, you mustn't capture this buy. You mustn't buy all the way because it's actually risky because you're trading counter trend. Always trade in line with the overall trend. That means you don't have to wait for the market to come up here, give your entry and set that because if you're trying to buy this market up, it may stop you out, maybe do something like this. And this market is like this, it may do something like this, stop you out, then buy up. So it is very risky to play counter trend. So I'm waiting for this. So this is what I'm expecting on the market, right? So I'll copy the chart image now. I'll post this on my Telegram channel. So I'll post this on my Telegram channel. I'm copying the link now. So I'm posting all the analysis on my Telegram channel. That means if you watch this, you can always use the Telegram channel to see how this things play out. Right? So let's go to the next chart. So we have marked this out for USDJPY. Let's check maybe 2 or 3 more pairs, and then we call it a day, right? So let's go to let's check Euro USD, right? So remember our drill. The first thing we do, we start from the daily time frame. Remember the drill, and I think I marked this out sometime and it played out perfectly. So from the daily time frame, right? From the daily time frame, I've forgotten how I didn't mark this out, how I got this entry. Okay, it was a harmonic pattern. Yeah, it's a harmonic pattern that gave me this entry. And I don't want to talk much about harmonic patterns because, okay, so I was looking at this, I saw this move, I saw this move, I saw this, and I was looking at this point on my entry here. And how did I get the entry? I was looking at this point here. I was looking at this institutional candles here, and that was what gave me the interest. So I don't want to talk much about that. So it is a very good buy setup, right? So now let's go to the current market. If you want to learn more about harmonic patterns, do well to join my mentorship program. We teach you how to trade harmonic patterns. So I've posted the USD JPY trade on my Telegram channel. You can see the link for the Telegram channel in my in the description if you want to join, right? Let's go back to this. All right, so let's scale down to the smaller picture. So now we expect a bullish setup, right? So this is USD JPY now. This is USD JPY. So let's go to 4 hour. Let's auto this. Right. So this is a 4 hour chart. Right. So now let's look closely. As you can see, this market was pretty bearish from here. Right. From the daily time frame, we have a bullish setup based on the harmonic pattern. So now we can look at the structure of the market. You can see the last lower high. You can see our lower low here. You can call this a lower high if you wish. Then this is our lower low. And as you can see, the market has broken structure. How? It's closed above this last higher low. So this is our break of structure because this is a 4 hour time frame. You know it's okay. You see it clearly on the smaller time frame. This is our bullish break of structure. But this is a significant high, so we may make the market to close above this point, right? To give us the clearer break of structure. So let's use this. I don't know, but based on, for me, this is my last lower high, and this is the last lower low because there was a significant sell from this point. So this is our last lower low. So now we have a break of structure. Remember the drill. We expect the market to come into the last sort of bullish, bearish candle before going up. So this is my other block. I expect this market to tap into this region and then buy up. So this is what I'm expecting on USD this week. This is the market to come into this other block here and then buy up. Right? It may happen, it may not happen, but this is what I expect for me. The market will come into this region because this is the last bearish candle. We have to mitigate here, and you can see there is some kind of imbalance here. Only buyers charge of this market. So I see the market to buy into this region and then give us the bullish setup. Right? So this is what I'm expecting on USD. And where is my target for this market? My target for this market, I can simply say, okay, I'm seeing some kind of liquidity at this point here. So this is my overall target somewhere here. I'm looking at this point in my overall target since it's a bullish setup. I'm sitting here for my overall target. I mean, I can put my I'm looking for a buy, so I can put my long position here at this region here, this other block here. Yeah. What am I expecting on USD for this week? Right, we'll just be doing 3 pairs and then we call it a day. I don't want this video to be so long. So now the market has come down into this point. Yeah. So this is the market to come into this point here, this region here. I'll put my stop loss a bit below the wicks. And where my target is, I'm targeting here my TP here, this point here. This liquidity point here. This will be a 1:11.86 trade here. This is a very beautiful trade. Right, so I'm setting this on USD JPY and I'm posting this to my Telegram channel as well. So do well to join the Telegram channel to understand how all these things play out. Right, so that is it about USD JPY. I mean about Euro USD. Sorry, Euro USD. That's Euro USD. Right, Euro USD. So let's look at gold. Let's look at gold to see what gold is doing. Let's look at gold. Right, let's just look at gold. Look at gold. I'm posting this thing on my Telegram channel. You can see these things and the playouts. Right? Just give me a moment. I'm trying to post on my Telegram channel so you can have an access to this. All right. Give me a moment. I'm posting to my Telegram channel now. Okay. All right. Posted. Now let's look at gold. I just want to do a few of time. I don't want to make this video so long. Let's look at CFD. See if you find gold on the CFD, as SAUUSD, right? So I'm setting this week. Now remember the drill. You go to a daily time frame first of all, the D1, right? Now from the D1, we can see that this market is pretty bullish, right? We can see from the daily time frame, right? So let's zoom this out a bit. Let's zoom this out a bit. So if I zoom out a bit, you can see that Gold was pretty, because let's look at the past chart, right? The market was kind of trending downwards, right? I'm trying to still zoom out a bit, right? So not to see this thing clearly. All right. Okay. So the market was kind of going downwards or some kind of bearish. Okay, let's look at from this point here, right? So now the market was kind of bearish. You can see, let's bring this out here. You can see from this, the market was kind of bearish. You saw this. Let's look at the recent chart. This is our higher, lower high, lower low. And then we can see that this was kind of a bearish structure on the daily time frame. And you can see there was a break of because market closed above this point. And then this market is pretty bullish. So look at our higher high, higher low, higher high, higher low. So this market has not been able to close below this highest higher low. So this is still a very pretty bullish market. Pretty bullish. So now we have known from the D1 that this market is bullish. So we are going to the 4 hour to see how to catch a buy setup, right? So now from the 4 hour, we want to see that break of structure as well. So let's remove every that drawing here. So let's look at the same thing we're looking at on the 4 hour. You can see our lower high, lower low, lower high, and lower low. So market did some kind of okay, this is a lower low. See our lower high here, so our lower low. Okay. Okay, yes. So this is what gold is looking like. I see something like this. Let me see. So I'm expecting gold to, this is based on 4 hour time frame. We are expecting gold to come to break structure, right? So expecting gold to do this, break structure on the 4 hour, give us our retest, and then fire out the way up. So gold setup is not really set up yet. So I'm setting on gold. I'm setting gold to come break structure, come down, give us our retest. That's our higher low, and running all the way up. Since the daily is bullish, we have to wait a bit because this market is not quite ready for the buy. It's not quite ready. Let me check the 2 hours to see if I can see anything. No, it's not ready yet. There's no break of structure yet. Right. So this market is not ready yet. It's not ready yet. It's not ready. It's not ready to buy. Higher high, lower high, lower low. It's not ready yet. It's not ready for a buy yet. It's not ready. So what will see market close above this last lower high before coming up. So this market is not ready yet. So wait to see the market break structure on the 2 hour time frame. Let's go above this point and then give us our retracement and then buy up. So gold is not ready for a buy yet. Let's look at let's look at let's look at GBP USD, and that will be the last one for today. Okay, let me remove everything. First thing you do, as usual, you go to the D1, the daily time frame, right? So now you zoom out to see what's really happening, right? So you zoom out a bit to see what's really happening on the daily, right? So this is a good zone to buy. This, as you can see, this is the demand zone. So you can call this our demand zone. This is a good, very good place to buy from here. This is a demand zone because why? You saw the market tap here and buy for weeks. That's a good place to buy from. I don't know why I'm not in this buy yet. So I have known that that's a good place to buy from. So let's look at what is happening. Come to our 4 hour to see clearly, right? So this is a very good demand zone. So based on the structure of the 4 hour, you can see, okay, let's look at, let's try to identify the structure of this market. So you can see our lower high, can see our lower low, can see our lower high here, can see, okay, this is lower high actually, no? So let me do that again. This is the lower high formed according to see structure in this market, right? So you can see our lower high and then you can see the market do something like this is our lower low, right? So we have to be very careful with this market. So, right, so this is our lower high, lower high, lower low, lower high, right? So this is the last structural point you can find. Right? This market, unless you just want to take it on a smaller time frame, right? But some people they will say, okay, some people like using the close prices to do this stuff. Let me use the line chart to see if I can something clearer, right? So some people want to use line chart to say, okay, this is the lower low based on the line charts. So okay, they will say, okay, this is the lower low, right? Because that was a week. So most times we use our close price to actually see this thing. So to be clearer for you. So can use our line chart or say, okay, this is our lower high, this is our lower high, right? This is our lower high, and this is our lower low. Okay. This is okay, this is our lower low, this is our lower high, this is our lower low. Right. So we have used line chart to identify this stuff clearly. Right. So now we have used our line chart to identify this stuff. Right. So we can see the structure of the market using our line charts. Right. So let's go back to the candlestick to see what's happening. Okay. All right. This market has broken structure to the upside. So you can see this is our last lower high, and then there was a break of structure. So the market closed above. We're using the close prices to check the structure because the wicks are kind of too much. So we want to use our, so we have a break of structure here. So we expect the market to do this. So we can now highlight our other blocks. This was our last bearish candle before they push up. So now we have known where to look out for our buy opportunities. We're looking for a buy into this region. That means we want the market to come here, tap here, and then buy up, right? So now we have known that. Let's look at the 2-hour time frame to see how to do this. Let's go to our 2-hour time frame. So, all right. So the market, okay. So I'm looking for the market to come into this region, this last set of bearish candles, all right, to give me my buy, right? That means I'm waiting for maybe a 1-hour break of structure in this area or a Wyckoff accumulation in this area, and then I buy all the way. So now where would be my target profit? This is a weekly analysis. So where will be my TP if I'm buying this market, right? I will be like targeting this point where I can see all these rejections here. So I can simply bring my long tool, all right? So I can take an open of this last series of buy candles, right? I can simply buy, put my buy limit here. This is about 30 or 40 pips, not so much, about 30 or 40 pips. All right, and I'm targeting where? Targeting this point here. Let me bring my horizontal ray to this point here. I'm targeting here for my overall, my TP here. So I'm targeting here for my TP. I need to be a 1:4 trade, a very beautiful trade, 1:4. That means wait for the market to buy into that region and take your buy, and you're targeting those equal highs for your overall TP. Right? It will be a very beautiful trade, a 1:3 trade, 1:3. I mean 1:4. Sorry, 1:4, 1:4. See a wonderful 1:4 trade. And I've posted this on my Telegram channel as well. All right. So if you want to be part of my mentorship program, do well to check the description and do the needful and all of that. So let's look at the last one. Let's look at one index, one of the indices we have. All right, let's go to our index. Index. Come on, load up. It doesn't load up, then we may call it a day here. But let us see if we can have this. Let's see if we can load us up. All right. All right. I think it's kind of hooking or right. Let us end there. I don't want this recording to be disrupted. So I'll end the recording here.